Hey guys, welcome to another webinar. And today we're going to be looking at some asset classes in regards to Forex. We're going to look at some indices as well. And last week it announced, or the week before, I can't remember now, we had Deborah on. Deborah wouldn't be joining us anymore. She was on the Telegram group for a little while, but she had to leave. And they said in requirements that we need in this type of business, and not every individual is cut out for it. Nevertheless, what we're doing today is analyzing the assets that we normally do and then going to indices, because if you look at a Telegram group, I sent a post not too long ago about the EA, and what I've noticed is the EA works better on specific assets on indices, mainly because they're very steady. Like if they're always going up, let's see, 2, 3 years in a row, those are the type of indicator you can just leave there and just let it run. Not indicators, but EA you leave there, just let them run over time. So what we're doing is we're testing. It's not going to be released for a while. You guys have to still stick with the stop loss take profit EA that you have. It's quite a very good one, but this one is more in depth. Now, for guys that have never been here before that might not understand what I'm saying, welcome on board. And you don't need to grasp everything at this moment, right? Just know that as we go along, it's gonna make sense. Okay. Just give me a second. I'm trying to find my notes. I have notes up there. So perfect. So I've been going through what's it called? The COT report, and I found JPY looks good for sure, right? So guys have not seen the COT report before. This is what COT report looks like. You have something called the non-commercials and the commercials. Commercials are people that use these assets for their day-to-day transaction. Now, if I want to buy something in Japan, for example, I'm in Nigeria right now. I need to get the Japanese yen. So I would have to convert my Naira to that, right? And if I convert that to that, I'm not looking to make money of that transaction. I'm trying to just get the best deal for my Naira. You understand? But as a speculator, if I was speculating a third party looking at that transaction, I want to know that, okay, this person is going to buy at this low price, for example, or they're buying it too much. So it's like they're overpaying for it or they're underpaying for it. So when I'm about to buy it and someone else is looking at the third party, they're looking if I'm overbuying at a very high price or I'm underbuying, you understand, at a lower price. So it's kind of like you're looking at me in Nigeria, you like that mumu. That guy doesn't know that he's being cheated when he's buying this stuff, because the real price of this stuff is, let's say, 100 naira, right? And when I went to the market, they sold it for me for 129. So, or it could be 100 pounds and someone sold it to me for 120 pounds, that kind of stuff. So speculators tend to make money off of if they're correct, and I'm gonna buy it at the right price or not. If the speculator make a mistake at the price I'm trying to buy it, then they lose money because they're betting on me. So you can see the speculator is already in the losing game, because you have to speculate that I'm buying that stuff at the right price, which means automatically the chances of you winning is slim. You understand? Because how are you so sure what price I'm going to buy it at? You understand? There's a variation in price. So things like that. But that's what commercials and non-commercials are. Non-commercials are the speculators. Commercials are the people making the transaction themselves. So we follow these guys making the transaction. We don't follow these guys because that place is literally almost a dead end. So we follow the commercials because the commercials want to always make sure that they're maximizing every penny that they're spending or they're circulating. So we go JPY short for CO2 report. Now the next thing we're gonna do is we're gonna go seasonality, right? For the guys that know seasonality, you know what it is. We check the date for which seasonality is gonna be. Now, people that don't know what this might look very confusing. There's the average price movement in the last 5, 15, and 44 years, right? So each graph is different years. So it's 5 years, 15 years, 44 years. And we stack them together like this to see where they're similar. Wherever they're similar, that's good sign for us. Whenever they're not similar, it's a bad sign for us. So we only want it when they're similar together, when they're moving in the same direction, right? All three has to move in the same direction. Like here, for example, all three is pointing down, the window is down. You understand? Or here, all three is pointing up to go up. You can see majority of the time, one might be doing something else, the other one is doing something else. You don't touch it during those period of times, only when they're aligned. Now we know JPY is going short. We look at today's. Not sure what happened, but the recording stuff. So I think the internet, internet's quite slow in Nigeria, to be quite frank. Okay, so 12 is right here, right? 12, and today's 12, right? 12 minutes. Let me just zoom in. I'm just gonna grab that and zoom in. 12, we're right here on the 12, right? Now we're looking for where all three align. That's where we're gonna look to trade, right? So 44 years is saying down, while 5 and 15 years is saying up. So we're not gonna listen to any of that until we find where they're all aligned. Right now they align on the 17th right here, but that doesn't look good because it's only a few days, 1, 2 days. We don't take that. I'd rather take something like this from here all the way here. We don't take 1, 2 days straight or 3 days straight. So for that reason, we're gonna get rid of the JPY, right? Now what we do again is go back to the COT report. And it's difficult. It's actually difficult to invest when the internet is this slow because imagine you put an EA on, the A is not grabbing because everything is going offline, that kind of stuff is quite annoying and pointless at that point. You literally have to trade manually or invest manually at that point. You know, Nigeria needs to do better. Uh, yeah, so we look at the next one, Euro. Uh, yeah, it's gonna take a while. Ideally, if what's the JPY? Ideally, if the JPY was aligned, I mean 16th, 16th right here. Let's see. Yeah, cut out again. So, we're looking at the euro now. So if we look at the euro and we see that the euro is short, so we can just switch this to euro. Now let's go look at the seasonality of the euro. What is seasonality of the euro saying? Yeah, so we look at the seasonality of the euro. It's looking good. Let's go zoom in a little bit. Okay, but the 5 years doesn't look good. I don't like this 2 days trade. Like ideally, right? If euro was aligned more, I would have loved to take in this euro trade, but after the 18th, it kicked back up. So it's like a quick Thursday to Friday trade. I don't want that. I want something like this. So I'm not gonna take that. So what I can do instead is let's look at indices. right, so let's look at that. Okay, so S&P 500 is looking like a long. No, actually, it's looking. It's 44,000 for this one. For long. Check that. That's probability. Let's check the seasonality, right? See what the S&P 500 seasonality is. This is what I'm talking about. Assets like this, you put the year on them and you literally leave them. I think it has a return of 10% on average for S&P 500 if you leave it on the classic, if you leave it in the banks or the invest in S&P 500. So now imagine when you mix it with the EA, it becomes ridiculously high. We're no longer looking at 10% return. You're probably looking at 2, 3, 4, 5, 600%. Literally after 5. All right, cool. Let's look at 16. That's so even though we have that, doesn't really look good enough for me. This is 12, right? Uh, we can do 12 till 15, but it's short. I don't like shorts like that. Let's look at what probability will do. 12 to 15. For guys haven't seen probability before, just like a casino, it tells you what the percentage of a specific day is. They're gonna win. You can see me buy or sell, and you literally work for the entire year. Um, okay. So S&P 500. From tomorrow, we got that up into 15. So what we can do is 500. I'm not gonna lie, it's gonna be a high risk trade. I'm not gonna front about it because I don't think 3 days straight like this. In a very long time I've done that. Okay. And then we have the probability. Yeah. Um, and this one wants us to stay the entire week, but I'm not gonna do that. I'm not gonna risk that. That's you being, adventurous. You don't want to be adventurous in this game. There's no adventure. Stick with the boring stuff. Understand? So now, what I'm showing you guys is because we now have new asset classes like the S&P 500, the probabilities, and all of that stuff. You can see even if FX isn't aligning for you, just come here. And these guys are safe. I mean, look at what the probability looks like. They're clear going long most of the time. Literally clear looking long most of the time. It's long, yeah. Just look at it. Long, 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 long. Oh, you got some shorts in between, but it's mainly long. It's mainly going up. So assets like this are stable. You can just trade this instead. So that's an asset for you guys this week that you can look into S&P 500. Monday to Wednesday. Risk level, I'll say high risk. Mainly because it's 3 days. No, we don't do that. We seasonality traders. We can wait for 3 months without no trade and then get one, for the next 3, 6 months. Depending on how long the trade is. And you take what you want to take this. So yeah, guys, if you have any questions, drop the comments on Telegram. And for the guys that have never been here before, please watch the other webinars and they will direct you on the angles to go. Or join us on Telegram and shoot me a message. It's easier that way. All right, guys, take good care of yourself, and I'll catch you guys in the next one. Stay safe and invest intelligently. All right, guys, take care. Bye.